What means for the home buyer, look for different ways to get into the market. It may even involve buying a property with other people.
You telling me I gotta get a roommate,
No,
McCall?
I'm thinking more of a duplex,
Oh,
Josh.
okay. I was like, wait a minute. If you've been thinking about buying, selling, or even borrowing against your home, you're going to want to hear this. Mortgage rates, they are climbing again. Home sales still sluggish, and price growth, that is nearly stalled out. So what does it all mean for your money? I'm your host, Josh Sidorowicz. This is the In Your Corner podcast from CBS News Philadelphia, and Mical Jeanlys-White, founder and CEO of Wealthmore, back with us to help us walk through all of this. We always love when you're here. Thanks, Mical.
Thanks for having me, Josh. Always a pleasure to come back.
I mean, let's start with the headlines.
Yeah.
CBS News, more than 75% of homes are unaffordable. Washington Post, home buyers are giving up hope that mortgage
Yeah.
rates will fall. Doesn't sound great right now.
No, it doesn't. It doesn't. Yeah.
What am I to think? You and I have had this conversation.
Yeah.
You know, I am waiting, one of the hopefuls
Yeah.
trying to jump into the
Do
market here
not
in
lose
Philly.
hope.
How do I not
Do
lose
not
hope when
lose
you're looking
hope.
at those headlines?
Because the flip side is homeowners grow 40 times more wealth than renters. Let that stick.
Okay, say that again.
40 times more wealth is what the homeowner has versus the renter.
So when we talk about is it still better to buy or to rent, you are still
Historically, homeowners have outperformed renters because of the automatic investment that happens. One, there's just about nowhere else where you could enter. Let's say you want to buy a $400,000 home. You need about 20% to do that.
Mhm.
You can't go out and buy $400,000 worth of stocks without having $400,000 to do so.
Okay.
So it is one of the only assets that you can enter with such a small amount upfront. It's also one of the most disciplined ways. We hear this debate over renting versus homeowners all the time that, oh, I could just take my money and invest it in the stock market. Great. But we're not seeing people do that with the same discipline.
Mm-hmm.
Versus the mortgage payment comes around,
Sure.
you do it, the house appreciates in value, you move from having debt to more equity in your home,
Yeah.
and it's almost automatic.
So where in theory that's the good alternative, but no one's actually doing
Now,
that.
we
in the
have
way.
not seen any data that folks are doing it consistently with the same level of discipline, because what happens? You find something else you'd like to spend money on.
Inevitably, always. Yeah.
But the number one thing you're going to pay is your mortgage.
So when you look at the housing market right now, what's your overall takeaway?
It's not great. And there are a few different things that are sort of contributing to it. One, we have a shortage of homes.
Mhm.
So there are more buyers than there are actual inventory.
Which
Even
is-
new home builds are down. It takes too long to build a new home. It's more expensive.
And we've been dealing with this since the Great Recession.
We need regulation to help. We need to make it easier for new homes to get built. We need to have even zoning laws that allow us to change things that were commercial into more residential, particularly now as you've gotten all this shift in commercial real estate. We see it in certain cities that are moving faster, but every city in the US is having the same issue where home, both rents and home ownership is getting more and more difficult. But the other thing that I think renters should think about is your landlord is not a non-for-profit. You are paying for it.
I sure am, Mical. I sure am.
You are. You are paying the taxes.
Yeah.
You are paying, the maintenance, everything. You're just seeing it as a lump sum through the rent payment.
Mhm.
But your landlord is certainly not eager to operate in the red.
No, I wouldn't
No,
think so.
no.
Yeah. Mhm.
So the notion that, it's cheaper to rent versus own, it's like, no, the
Yeah.
cost of that property is being passed on to the renter.
Sure. If you're thinking long term,
Exactly.
right?
Exactly. So long term, don't lose hope. Continue to save. Keep track of the mortgage rates, but also recalibrate. So maybe your first home is not the 3-bedroom, 2-bath starter.
All right. So let's pause there for a moment
recalibrate.
because that is part of where I'm stuck right
Yeah,
now, right? I've had a picture of what that home would look
yeah.
like after we moved here to Philly and what I wanted. And the reality
You
is,
have to reassess. You have to reassess.
that's not my starter home anymore.
No, you may have to buy the ugliest home on the block.
See, I don't want to do
I know. You may have to rip out some like purple carpet,
Yeah. Mm-hmm.
right? But you'll be building wealth in the meantime. You can do it at a pace that makes sense.
Yeah.
But maybe it's not like the 3 bedroom. Maybe it's a condo to start off,
Yeah.
right? And when you're ready to move, the housing market is still in your favor. So you might decide to then buy the dream home and rent that property out or get the appreciation and sell it off to another eager home buyer.
I feel like we've all been, or at least I've been ruined by Instagram, right? I see what those
Yeah.
homes look like on Instagram. That's the home I want.
They're Airbnbs, Josh. They're not even the homes. You've seen the flip story where
Mhm.
literally you have some people out
Yeah.
here who Airbnb the same home to create an IG facade.
A facade, it is. I know.
facade.
Nothing's real on there
A
anymore.
facade. And it's always like the biggest, most amazing home.
Let's talk about mortgage rates. Because we talked about, we talk about rising prices, we talk about mortgage rates. Particularly, though, we have seen that mortgage rates have started to tick back up here. What is the biggest factor that's impacting that right now?
Yeah, everything has gotten more expensive.
So, inflation.
Yeah, rates go up and you're going to feel it. Mortgage rates are not sort of immune to the impacts of rates, nor are credit card rates. So when the cost of borrowing goes up, you see it in every borrowing scenario. And also when you have an economy that feels a little more unstable, that means the risk has increased and the risk is calibrated through the rates. So if lenders feel like, hey, the US buyer is not as stable, it's reflected through the rates to accommodate for the increased risk. So things like the economy sort of moving, inflation going up, if you have a rising unemployment, those things translate into a higher or riskier consumer and translate into rates going up.
I've read some people even saying, too, if the situation would be better if the U.S. was not currently at war with Iran as well, that all of that plays a role in
Yeah,
this.
gas prices impact inflation.
Hmm.
Inflation goes up. Consumer has less spending power. You guys just did a segment on debt. We're
Hmm.
seeing the debt creep up. So when banks see higher losses, the cost of borrowing goes up for all of us.
Everyone was yipping when mortgage rates finally dipped below 6% for the
Yes,
first time
finally.
recently, and then very quickly went
Yes.
back. But I go back to this discussion on mortgage rates too, because still speaking historically,
Yeah.
mortgage rates
Yes.
are low
They are low. They are
compared to
low.
what they were in the
They-
90s, in the,
Yes, they are certainly lower.
I remember finding out when I think my parents' first home back in the late 80s, early 90s, it was like a 15%.
Yeah.
That's insane.
That's
Think
insane.
about that today. The problem, though, of course, is prices got out of whack, right?
Prices got out of whack. And then you also have existing homeowners have very little incentive to part ways with their existing mortgages.
They are locked in.
They have nowhere to go. So if you bought a home 5-7 years ago and you got in at, what were we talking about?
2%, 3%. Yeah.
1.75
Even then, yeah, it dipped below 2%.
on a 30-year,
Mm-hmm.
you're not likely to sell to now move into 6%. You're not likely to refi. We saw refis go down by 20% in the last week because you would be repricing that entire loan. So even the notion of I want to refi to pull equity out is unattractive because you don't, let's say I have a $400,000 home,
Mm-hmm.
appreciated, and I want to take $100,000 in equity out.
Mm-hmm.
But I was at 2% and now the rate's at 6%. I don't get to refi just the 100K.
Yeah.
I
You gotta
have
do
to
the whole
reprice
price.
the whole remaining principal balance. That's incredibly unattractive.
Yeah, that's not a winning situation.
So unless a home buyer has to move, you're not going to see a ton of for sale signs in your neighborhoods.
No, I mean, I've got some friends who are locked into those low rates, and
Yeah.
they're like, "Yeah, no, I
No,
think we're gonna
they're
stay
more
put."
incentivized to remodel.
Well, and if you are gonna move and you have that lower rate, you probably won't be able to maybe even get as much house as you have now
You
because
got it.
you were able to afford it with that lower rate,
You
right?
got it. You got it. You're more incentivized to either rent that property out, do something else, but certainly not incentivized to part ways with it.
So home sales as a result, then we are seeing in the new homes sales data just did recently come out. I mean, it's pretty kind of stagnant at this point,
Yeah,
isn't it?
pretty flat. It's pretty flat. So it means for the home buyer, don't lose hope because most homeowners will not have the sort of same discipline of a mortgage to build wealth. So recalibrate, look for different ways to get into the market. It may even involve buying a property with other people.
Okay.
We saw this when I lived in California. That
Roommates? You telling me I got to get a roommate,
no,
McCall?
I'm thinking more of a duplex,
Oh,
Josh.
okay. I was like, wait a minute.
This was very
Okay, a duplex.
popular.
Oh, okay.
I'm thinking more of a
Okay.
duplex,
Okay.
right? So that gives you a little, buffer to sort of go into a property. But, I have lived in cities that, this was a real issue. And people would, when I lived in New York, people would buy a brownstone and renovate it and rent
Mm,
out 2 units and sort of occupy the other unit. I saw this in California and San Francisco at the height of their housing
mhm.
crisis. People had to get super creative to kind of weather that storm, and they were able to do that and build wealth and move on until prices normalized or rates went down.
Yeah, unfortunately, though, for those of us who want the turnkey scenario,
Yeah.
that's less and less likely anymore.
No, I purchased my first home. It was not in a turnkey scenario. A lot of sweat equity, my friend.
Hmm.
I remember my mom showed up and she's like, "This is what you guys bought?"
Are you sure, McCall?
It
This
certainly was not a, housewarming the weekend after, right?
sure.
Move in and housewarm. But we're still in that home. Looks a lot different than what we bought.
I'll bet it does now.
But,
Yeah.
you just have to sort of recalibrate. It certainly was not the sort of like, hey, move in exactly as you want it.
I mean, we have our idea of the amount of home we need
Yes.
has expanded tremendously over the past several decades too.
The amount of square feet per individual is like 3, 4 times what previous generations. So when you look at, we love to compare against the boomers and sort of other generations,
Hmm.
but they weren't in these mega size homes.
I look at the home that my grandparents, there was their first home, and it was the home that they died in,
Yeah,
and it was such a tiny little home, but
modest homes.
it was their home, and it worked for them
Yeah,
for decades and decades, and it was paid off decades before
yeah,
that. Yeah,
yeah. We've also inflated that,
yeah.
leave it to beaver home.
All right, so you got mortgage rates, you've got sales have remained sluggish, and then of course the problem still is that prices became so inflated during the
Yes.
pandemic, and we're still battling with that. I mean, you look at the data
Yeah.
in Philadelphia, the median uh, home price or yeah, median sale price in 2019 was $210,000. That sale price has now jumped to 300,000,
Yes.
309 actually. I mean,
Yes.
that's a sizable jump.
Yes. And on a 6% rate, you're talking an additional $600 to $700
That's
to
no
own.
small chunk of change.
No, it's not. It's not, which is why we have to get creative. We have to think about smaller properties. Maybe it's a condo versus a single family home. Think about scenarios in which, siblings could purchase together. And dare I say it, for older family members who are thinking about leaving something for their children, there's a lot of incentive to gift now,
Okay.
right? Just think about the time value of money. It will benefit that 40-year-old a lot better now to receive that inheritance versus later. We have a lot of boomers with excess capital.
And it would help now
It would help
versus
now.
waiting till when you're at the later stage in
It would
life
help
and you're
now.
like, oh, that would have been real nice
It
20
would help
years
now.
ago.
And I can see all the 40-year-olds sending this clip to their parents. Give them the wealth now.
I know you say don't lose hope,
Don't lose hope.
but
Recalibrate.
it's frustrating.
It is. It is.
It's frustrating for a
At
lot of
the
people who are
height.
looking, thinking it was going to be one way, and it's not.
Yeah, Josh, I mean, at the height of the housing sort of market in New York. I was living in New York, and we were like, we can't afford. Rent is so high. What can we buy? And we're willing to buy like 500 square foot
Mm-hmm.
studio
Yeah. Yeah.
for two adults.
Yeah.
I was like, I went to college, did all this, and I could barely.
And this is what you're doing. A closet. You've gotten a closet,
closet.
basically.
A closet in a single room, everything in a single room. But that still created a tremendous amount of wealth.
But it was still yours in the end.
It was still yours. And for many people who did that, that still created a tremendous amount of wealth for them. And when they were in better situations, they sold those properties or kept them and rented them. And it was still an asset that was adding to their overall wealth creation. I promise you, they're not still in that 500 square foot. Josh is like 500 square feet.
Like, no.
He's like, no way.
No. The marriage wouldn't survive, I don't think. No. But
Yes.
but to your point, okay, so you've got
Yes.
to change course.
Yeah, you can have it all, just not
Just not right now.
just not right now. Adulting is hard.
It is hard. I don't know why we all rush to
Yeah,
do it so
adulting is
quickly.
hard.
Yeah.
Right? It's a balancing act.
Yeah.
Student loans, home ownership, insurances, healthcare.
Yeah.
Okay, and sort of making that budget work.
Yeah. All right. I guess I'll take that, and
Yeah.
I'm gonna let that marinate for a little
I'd
bit.
rather you be in a smaller home than be house poor.
Yeah, that's right.
Right,
Because the
'cause-
alternative is you're sitting there going, well, now we can't go anywhere, do anything. I can't even buy the
Yes.
couch.
And we hear it. The folks who
It
are
happens a
like,
lot.
stretch the budget to the point of like no room
Mm-hmm.
in order to get into a home. And then the minute there is a bump in the road, somebody loses a job or something,
Mm-hmm.
then you're in that situation of feeling like I may have to default on this home. So I'd much rather folks be in a smaller property that feels more manageable with a mortgage that you can manage versus like stretching yourself to the brink and not giving yourself any wiggle room to go on vacation, to go out for dinner.
Yeah.
And now all
To
you
save.
can do is be in that house
Just sit in the house with your thoughts on the floor
and painting.
and painting, obviously, or caulking or some, God forbid, I don't know what. Yeah. Mical Jeanlys-White, founder and CEO of Wealthmore. We always appreciate you coming on the pod.
Thank you, Josh. Don't lose hope, folks.
Keeping it real. I'll try.